Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Sorry about that. What's up, guys? Happy Tuesday. Man, there's a lot to cover tonight. BNED's 10Q just finally came out, so I haven't even really got a chance to like go through it all that much. I mean, they gave us some of the numbers in kind of the little NT 10 that they put out, but also it said there is a credit amendment that was actually finalized. I think March 12th. It said is that today? It's today, right? So we'll look into that. I don't know how much it's going to say. It says by April 3rd that they have to finalize that and make it a binding agreement. So we'll see if we can find more about it. I don't know. I'm definitely going to look into some of that. Alto's earnings came out. Alto is their management really knows how to just keep you waiting. You know, I liked some of the stuff that they said. I thought... Justin asked pretty good questions in the transcript. I don't know if anyone's read or listened to the earnings call, but you know, Alto just continues to kind of struggle just to kind of get some of their assets just producing like they say they will. Like everything always seems to get pushed back. This time I thought it was probably almost it wasn't the best presentation, but I still thought it was the best that I've seen from them in a while. The stock. Obviously, today there was a little bit of a sell-off. I mean, I don't even actually know quite where it ended up at. Well, I can't. Honestly, I know it was down at the end of the day. So, BNED had a rough day just because people are finally internalizing the fact that could be dilution. But I don't know. I mean, it's kind of expected at this point. And I get it now that the Henrik Alex, who I talked to on there, is like, yeah, obviously it has to do with the risk of being substantially diluted. But in my opinion, I've seen this so many times with these kind of companies. Like, yes, the shareholders can get diluted, and like that sounds bad normally. But for whatever reason, these are the kind of companies that, like, as long as they stay alive and they can like just keep some ground room to run, and that's kind of why I've been so bullish on BNED, because yes, I get it. Don't get me wrong. I understand the risk that's involved there, but at the same time, the most important thing is the fact that if it survives, like, it has a trajectory to get to profitability, and that's what I care about. But anyways, yeah, so Alto down 10%, you know, today it's whatever, it's moved a little after hours. But, I mean, who cares anyways about after hours? But, you know, it's people reacting, you know, it's not quite what they wanted to hear. That's what you can tell with the stock price. You know, once again, though, I think I read Jeremy Raper was pretty upset with Alto, and I understand why, because, you know, he took a hit on him, and almost... was quite a few things that Jeremy recommended that would make sense for the company to do. And the problem is now they're all saying that they're going to start looking into try and do those things. And, you know, I would understand if I was in his shoes. Like, I told you all these things you could do to work on the business, and instead you didn't do them. Killed it on the last earnings. And when I say killed it, not in a good way. And now you're starting to, you know, say like, these are the things we're looking into. So that's extremely frustrating, I'm sure, as an investor. You know, don't get me wrong. I actually got very lucky. I timed to sell on Alto with a big part of my position right before the big crash. Now I held a big chunk of it too through the crash, but I still sold. I mean, I had such a low cost base. I just got really lucky on my timing with Alto. So at this point, you know, it's not like a super large position for me. It's a much bigger position for Johnny, but either way, we'll go into the earnings call with them a little bit. We'll go through. If you guys have any questions, please by all means, you know, ask. Let me know what you guys think, and then we'll see. I've been following the Barnes and Nobles communication here. And, you know, BLCM immediately brought up that, you know, today we amended it is today, right? Yes. Our existing credit agreement to, I can't even remember what day it is anymore. Among other things, revise certain reporting requirements under the credit agreement and set certain milestones for liquidity and refinancing contingency plans, which respect we must execute a binding agreement commitment no longer than or later than April 3rd, and may be extended by the administrative agent to April 10th. What that means, who knows? And Henrik brings up a good point. He's like saying, strangely, they haven't filed yet, but he's obviously bearish on the stock. He's going to do everything he can to push it down, which is fine. I'm not, and when I say he's saying that, I'm not saying he's saying that because like people are arguing he's a pump and dump. I don't know this guy. You know, I really don't. You know, he's probably way better of an investor than I am. He's been doing this a long time. I don't know. People have their own investment styles, so that's why when they were bickering before, I was just like, who cares? What do you guys? I mean, you guys are sitting here. You sound like fucking children. Sorry, my language. But anyways, then BLCM responded. I noticed that too. I went back and read the credit agreement, and there's a provision about timely financial filings. The amendment could be related to their late 10Q, or they create an exemption from reporting due in terms to the amendment that relate to material non-public information, like provisions related to a merger. Notice that the items. The listing of items in the preamble to that sentence says among other things, which means they didn't list all the changes that the amendment will make. So we'll have to see. You know, and obviously Hendrik's case is that it could be heavy equity dilution. But that's why, once again, in my opinion, I still don't think that matters. I understand why most situations that would be terrible. But I already think when something's this low, like equity dilution is not going to change much. If this turns around and the assets all become worth something again, the equity becomes worth something again, whether there's 50 million shares or 100 million shares, that's really not that big of a deal in my opinion. You can argue that all day if you want, but I can see time and time again with companies that like the stock market does not care. They just don't care. If all of a sudden it becomes profitable, I don't care if the earnings per share are much lower, the people will pay up just the fact that it's safe. People just pay for safe companies just with steady cash flows, which is what BNED's becoming. But we'll see. We can check on this. The 10Q came out. The numbers look good to me. I mean, it was all kinds of things that we wanted to see. Let me see if I can pull out. I just had Alto pulled up here, but let me see if we could just pull up. I just wanted like the quick information on what happened. Do they have it listed? No, I just wanted to go to BNED. So obviously, it was a red day. Came back a little after hours, but once again, I really don't care about after hours. So we'll see. This is the earnings preview, which still doesn't. I just want to see what the 10Q. You would think that they could have like an amended version of this where it shows what the 10Q says without having to go into the 10Q directly, but that's fine. We can go right into a 10Q. I had Alto up here, but we can go through the Alto earnings call. Yeah, I'll go through Justin's points because I thought those were the reasonable side. But they're talking about selling Western assets now, which is, like I said, the sore subject from Jeremy Raper, I'm sure. And then it's their like the Magic Valley plant. You know, they had that shut down because it made more sense. They thought based on, you know, they had to do some upgrades to the facilities, and they thought it would make more sense to have it down during this time because crush margins were low. Now crush margins, even though they're low, they're at historic highs for this time of year. So one of the things management kind of is talking about is, you know, they're still bullish on this year just being good for crush margins. So we'll see. There's a lot of benefits from the carbon capture. If they're able to keep moving into that market, you know, the government has all kinds of grants and stuff in that realm. So that obviously could pay off. But we'll see. We'll see what all comes from that. Like I said, I'll read through that when we get there. So, I mean, this is just the. Is there just. All right, so there's all the debt amendments. I mean, I guess, you know, if you really want to look at this, like the most important thing is like, you know, when we're talking about BNED, we're slowly moving towards profitability. That's obviously the big goal here, is to get towards profitability after kind of the whole COVID thing and COVID years, and you know, college is really slowing down. A lot of people aren't going into schools. That was a big hit on the business. But then the FTC model came in, and you know, inclusive access is a way for them to basically leverage volume to benefit for not only the students purchasing cheaper, but for BNED to generate money for themselves and for the colleges. But the more important thing is it just looking at the numbers. You know, 3-month ended, we're at -9.9, but if you compare that to last year when it was -22, so if you just kind of follow that out, think about it, they're growing the number of stores. So like these numbers to me look really good. You know, I get it. It's negative. Operating income. Where was operations? Oh, sorry. I just looked through this. Oh, this is the cash flow statement here. What? Oh, just here, just operating income. Just the fact it's positive now. So now we've moved into positive operations. You know, where you know, 3 months last year was -15 million. So we went from -15 million to now we're positive. So that's the thing, is with FTC, it's growing. It's going to continue to grow. Department of Education now, they just put out a thing the other day saying that the decision most likely is pushed till July of 2025. So now we have another full year and a half essentially to get to that point before we have to worry about anything like that. And I thought an important point to bring up is that they had talked about with the FTC model. The DOE had said possibly in an opt-in structure, the way it's written right now is that it would become mandatory for schools to at least have access to the textbooks, so some kind of program like FTC, because it has to be within the first 10 days of a payment period. So like basically saying students can get their books on time for classes. That's like the goal. That was the original whole point of the program. And they basically will say that it has to become mandatory. So even if it does become an opt-in in that scenario, and you then have to get all your textbooks at that point, what it's going to do is this gives them a full year to basically run with. And then if it does become opt-in, they're going to have like a moat essentially. And I think a first entry, because let's say you go to, you know, 500 schools or 400 schools over the next year, and if people start getting FTC type models, or you were, I think I think the numbers were going to be 250 or 300 or something like that. Because I don't want to like overstate the amount of stores that they'll be in by that point. I want to be somewhat accurate, and I think that's what they said was it would be 250 or 300 stores, somewhere in that realm. But if you're already in those stores and all of a sudden you have to become, it's mandatory to have them, but it becomes opt-in, you already have such a footprint and a foothold over the rest of the market that your operations from the volume of the amount of stores as opposed to just the amount of students that are involved in the programs will outweigh itself and continue the profitability of the program. And now you have a moat, and by law, other schools are required to have a program like you. So I still think all this, having the Department of Education thing pushed out by a year is huge. And now if there's a credit amendment we'll see. I don't know if anyone else has commented here, but if there's a credit amendment and we can get the debt pushed back a year or 2 years or whatever they're working on, I don't know. We'll have to see what the equity dilution is, because that's going to affect the stock term or stock price in the midterm. But like, to me, if they can amend it even with the dilution, I think it's huge. We're just, all they have to do is get to that point where they're on their foot and they're profitable, and then all of a sudden the retail environment is going to become more friendly to them. I saw some people, someone asked, like, in a recession, like, how would that bode for BNED? All businesses are going to struggle in a recession in ways, but even in a recession environment, that means interest rates are going to come down. So if you have to restructure your debt, you're at a lower interest rate too. So there's a lot going on, and it's hard to say one way or the other what would be good, what would be bad. But either way, I still think they're hitting the things that I need them to hit. So I get it, and I get it. The market's negative towards it. We were just saying BNED's. Where are we at here? So, the market today, waiting for the news, it was obviously tough for them. After hours, it's starting to climb. So maybe people are starting to see that news that, there's a credit amendment. And that's what I'm saying is, if there's a decent credit amendment here, like, this is not dead. And people are starting to price this for death. And I don't know. That's where a real opportunity arrives. I got a huge, order in today at 61 cents for me, so that was great. I'm happy to get an order in there, because I don't know, and like I said, if I'm wrong, I'm wrong, and at this point it's too late. So that's the point of this portfolio, is to be risky. Some of these guys are trying to argue just like sheer rationality, and I don't see it. I don't see in terms of the upside not being here and being high. That's what I see. You can argue it's stupidly risky, but that's what I'm here to do, is to find really risky stocks that I think the upside's worth it. So we'll see. I wonder. I know you can go to the NASDAQ and you can look and see after hours what the volume kind of is. I don't really care. I'm not gonna bore you with those numbers. It's like stupidly tedious. It doesn't matter. But and then we can kind of hop into no new shares issued. I wonder if he knows that, because he's talking about BNED there in my my notifications there. So we'll see. Oh, I didn't even catch this. So note the 10K, or he must mean 10Q. Today omitted the language in the 8K from last week about a potential equity offering as substantially. Perhaps this change in the credit agreement indicates an equity offering is unlikely. I didn't even think about that. So that's another big point, man. If the equity dilution was off the board and they were able to just amend it, this is one thing I've thought too, is like, if I was invested in the debt on this company and they came to me and they're like, hey, listen, you can see where this is headed. We showed you our projections. You watched us scale up, and you can go to these colleges and you can talk and see how the model is spreading and how successful it is. Why would you risk destroying that whole company, when all of a sudden in the future you could have this like thing that, you are the kind of go-to for their debt, and, it's going to be more guaranteed. I don't know. I just think, and don't get me wrong, the lenders don't care about equity. They're above them. They're going to do what protects their own interests. But he brings up a good point that it doesn't mention that. I'll like that, just because. And All right, let's go to Alto and go to the earnings call. Oh, this is the actual presentation. I didn't get to look at this. Purple's a good color choice. Producer and distributor of renewable fuel and essential ingredients, a large producer of specialty alcohols. If you don't know what Alto does at this point, and if you have any questions too, guys, you can throw it in the comments. They have a few different areas, and you know, the Western asset ones are the ones that they're talking about possibly. So, you know, they basically make these high grade alcohol type products, and they use them for all different kinds of things. So they're involved in kind of these different things. This is one of the more interesting ones. Is and actually I hope you guys can see this. I hope that's zoomed in enough. If it's not zoomed in enough, let me know. I can zoom in. But they you know, and I don't know how much this means, but signed letter of intent with Vault for safe and permanent CO2 storage deep underground in the secure geologic reservoir. So I guess that's just saying that they're going to be working on that. So obviously they're going to try and get, you know, capture that carbon. Progressing an overall system design, community outreach, financing, vendor negotiations, and schedule alignment to procure equipment and install power and compression. Evaluate attractive options to meet Pekin campus's current and future energy needs. So an increase in capacity, on-site energy facilities that may be built, owned, and operated by independent third party. Lowering carbon footprint, cutting long-term energy costs. Utilizing the EPA's extended CCS application approval process from 18 to 24 months to further align projects. See, this is like that's one of the things that people keep, you know, kind of being critical of Alto about, is they're always extending all these things. Like every time they're saying like this should be done by this point, they're extending it. You know, are they moving in the right direction? Yes. It's just, it always seems slower than it should. And, you know, that's a relatively reasonable critique of the company. Just trying to read through. Obviously, sustainability efforts. Expand their customer base. So improving performance, 43 million increase in gross profit, 27 increase in adjusted EBITDA, 33 million available under their operating line of credit, 65 available under term loan. Trying to see if there's just anything. You know, net sales are they're down, but part of that was them closing the Magic Valley facility, and you know, it did say that they're looking into all these different possible things, divestitures into some of the Western assets. You know, they have a mixed bag of things that they're working on, but go to the actual transcript here, because I would like to just point out. I swear I'm not a bot. It always asks me if I'm a bot. I'm not a bot. All right, but if we scroll down here, so I mean, the actual earnings call is, you know, I don't really think they brought in too much to play here, but all right, so this is where Justin comes on. So he said a few questions, a couple were answered. I was wondering if you could maybe walk us a little bit better through the gross loss, specifically at the peak inside of a 1.1 million. For example, on the financials you provided, you kind of show 40 cents over a 40-cent cash margin. I think last year, again, based on your financials, it was maybe around 3 cents. And in Q2, I think it might have been negative. And you guys had a much different operating result. So I was just wondering, maybe even compared to Q2 there, is there something that within that Pekin number, I don't know if it's derivative losses are there that's playing with that. He said, yeah, Justin, they do include the derivative losses, and that's a large, most of the derivative is associated with sales and volumes associated with that, particularly if you think about it. All of our fixed sales for specialty alcohol is aligned with that facility, as is the significant amount of natural gas obligations and the like that we want to also hedge on a normal basis. He's like, so I mean, I think the number is over 8 million. So if we take that into account, then the peaking is more of a 7 million gain backing out. For example, those derivative losses is one thing. And he said, okay, I guess just to further understand that. So as you mentioned, natural gas prices fell at the end of the year. I assume that's a large part of the hit you took on the derivative losses, but those derivatives are specifically to hedge in margins of your specialty alcohol sales, right? He said, yes. So the derivatives that we normally would carry are in two factors. One is just to make sure that we've locked in natural gas prices, right? As much as we wish we had a crystal ball to know what the weather is going to be like in locations, it's obviously difficult to do. So the next best thing is to make sure you avoid significant risk that can happen over a short period of time. We see natural gas prices spike to not only hundreds of dollars, but thousands of dollars as well. So to avoid that, it makes sense to lock in the winter strip to be able to cover those. So that was obviously a mistake. On the fixed alcohol sales, most of that we will effectively take those fixed sales, swap those back out into floating and lock into the spread between that and fuel prices, largely because it's difficult to go out and procure delivered corn to the facility. So as a specialty alcohol sold in, so the derivatives are more of a paper loss. And he said, correct. So to your point, the natural gas hedges were part of that as natural gas prices. So, but to a large extent, it was mainly related to locking in the premium on the high quality volume that we contract. So keep in mind, we contracted Q3 and Q4 for all of 2024. And so as the market prices fell, we're taking a timed loss, but it's an unrealized loss. And those unrealized positions on the derivatives will continue to flow throughout the course of next year as we unravel them ratably. With when we deliver to get the product physically. So he goes, okay, that makes sense. Perfect. So he said, yeah, Q4 and Q1 are taking unrealized losses on those. He said the reason when they made the change, Justin, is because historically we've experienced at times where we lock in our fixed price sales hedges or derivatives and we'll experience the whole gain or whole loss in the fourth quarter. Effectively, you're trying to work through the remainder of the following year to get the benefit, or you carry the burden of trying to make up for that loss for the following 4 quarters. We thought it would be best instead that we were actually, those were actually a distraction, really didn't reflect the true financial impact of the company, which is why we're now backing them out of EBITDA. So you can look at EBITDA as as their more, in this case, a more reliable form of earnings. As far as the specialty alcohol sales go, it's a good point to consider. So it looks like you guys had a higher target last quarter. I think you're hoping to hit 90 million for the full year. It looks like maybe you only got about 75. He said, what can we expect for 2024? He said, I think, it's nice to hear someone ask intelligent questions in an earnings call. I feel like half the time it's just kind of nonsense. So thank you, Justin, for actually asking some decent questions here. But we saw not only market pricing compression, we were protected from that because of the prices that we negotiated. Challenges were that, as you saw, consumer demand started to change for different products that our customers as well have to make adjustments to the product. Sorry, sometimes it's so hard to understand what they're trying to say. How much alcohol they were taking in as well. So there it is, if you will, 2024 volume. Some of the 2023 volume that was rolled into 2024 and being able to continue to preserve that margin. So we should expect a material increase in gallons sold, especially alcohol for 24, and he said that's the goal. He said, one last comment, it's really great to hear stronger statements and your willingness to potentially dispose of the Western assets. I guess just given a lot of the public comments made by your competitors on the potential value of those facilities, is it safe to assume that any disposition of the Western assets would be likely to be over 100 million? And he said, I would hope it would be 600 million. It's difficult to assess, right? I mean, we have value-add opportunities that we always indicated. That message has never really changed, so it's not unique for us to say this. I mean, this goes for not only the Western assets, but all assets, right? You have to consider viable and reasonable opportunities. And so with that said, we have not found to date opportunities that exceed what otherwise we could do with the assets ourselves. So they're continuing to invest in those, and to the extent that changes, they'll remain vigilant and basically, trying to do the right thing for the company and shareholders. And once again, I think that's where Jeremy Reaper was so annoyed because, he had kind of said that before, and it looks like it was like a back and forth thing where, now they're saying that, but I mean, at least management's moving in the right direction there. So, I think, if you're going to sell an asset, you got to try and do what you can for the best. You know, I guess you could easily make the argument that, you know, especially when you're going to have such a rough queue last time, and you know, things are taking longer, and then they had the fire and stuff like that. That would have been a perfect time to try and raise some cash during that time. So, you know, it is frustrating. On Thursday, I'm sure Johnny will give you guys his take on it. You know, so we can go through more, and we'll keep digesting all this stuff. Like I said, there's a lot going on. You know, but I do think with what they were saying, like, they are doing things that will improve as we go forward. So, you know, if the Magic Valley facility is going well, if crush margins start working, if the carbon capture starts to move along better, you know, these are all things that could materially adjust this business. Like, it's cyclical, and it has a lot of moving parts in a way. So, you know, it's tough when you're going to invest in, I feel like, in a company like this. You know, this might not be a bad time to start to look into these kind of ones, because, you know, when they have a great quarter and stuff like that, that's going to get priced in pretty quick. And, you know, it's one of those things that you're either in it when it's ugly, or you buy it and you make small amounts, or you hold it. You know, that's why you're supposed to hold stuff for the long run anyways. I mean, sure, you could probably trade it or whatnot, but, like, I don't know. I feel like that's limited in scope, and that's nothing I would ever do anyways. So, but overall, you know, there's a few things I thought were slightly disappointing. Just some of the numbers I were hoping would be just a little better than they were. But at the same time, I think they're doing the right things now. This was a much better earnings call and report than last quarter's. So after that dumpster fire, we'll move on to the future, and hopefully they can start to put together some a good summer. I think as the weather warms up, and, you know, we'll start to see what comes from all this. Yeah, we'll see. There's a lot of moving parts in Alto. Alto's and we'll see. I mean, you know, if they announce some kind of asset sales, and they get a good deal, well, that could be huge. But let's see. I got one more comment here. I'm assuming this is on BNED, because that's the one I'm all involved here. Oh, this is Bulls. I think this is the same guy. Why would creditors have removed the equity offering option from the amended agreement? I don't know, Henrik. Why would they have? We'll find out. Let's see if there's anything else of. So the same thing. He's just posting in more than one spot. So no, nothing too crazy new. But yeah, it is interesting to note. So on the debt here, does it talk about it in here? On March 12th, we amend our existing credit, among other things, to revise certain reporting requirements, set certain milestones for liquidity and refinancing contingency plans with respect to we must execute a binding commitment no later than April 3rd. I don't think there's too much more about it than that. So, well, I mean, the good thing is April 3rd. I mean, where are we at? So, you know, in a few weeks, we'll have our answer. So, we'll see. I mean, I'm sure the stock price just after today is going to be all over the place. I guess it took till today for it to start getting ugly. I thought this would occur on Monday, to be honest. I thought the stock price would be in the tank on Monday, but maybe the market will take that as a positive. Market's all closed now, so what do we get for a final after hour? Oh, it's just up a little bit, so whatever. It doesn't matter. It's hard to say. It's hard to be, at this point, if you're not already bullish or bearish, like, but whatever. I guess, some people, there's still a ton of upside if you were to invest now. So, or downside. you know, I'm not saying one way. I'm just saying like, yeah, you know, it's not like you have to. It's not like a rush to necessarily get in either with these kind of things. I don't think there was anything else I had to add right now. FTC, in terms of, I think it was up to like 50% for revenue for year to year. So, I mean, that was excellent. So, you know, that's the thing. BNED killed their numbers. If it wasn't for the fact that they talked about an equity dilution, like right at the time that they had these awesome, it could have been a good week, but you know, they said that they had to focus on that. That was the most important thing. So they weren't worried about getting the 10Q out on time. They were more focused on making sure that they got that news and that they worked on this amendment and stayed alive, which I agree. Honestly, you know, the timing of it sucks, but I don't know if there's much they could have done. You know, Department of the Education coming out and going through what they started to do at this random ass time, that sucked too. But it is what it is, and honestly, that's what creates the opportunity. You kind of gotta go through the dust to find the gem there. So we'll see. Nvidia never stops growing up. So what is this? What does this chart now look like? Look at this. It's like a nosebleed. Look at this oversold. How more bullish can you be? It's this oversold, and just people just keep buying. Is this oversold? Look at this. This is a 10-year monthly chart, and look, it's still oversold. That's crazy. This was worth less than $6. It was less than $6 in 2016. Mine's is Office 365 NASCAR. So yeah, I'm honestly not. I just use Office 365. I actually get it through my workplace. It's free through them. Although, to be honest, now that I already built all this stuff, if I ever switch businesses or anything like that, I would just buy Office 365 anyways. I'll pay the $100. I don't even care. At this point, I use it so much. It's not even. It's worth it for me. Like less than $10 a month. Like I'm all in, or whatever it costs. I don't even know what it costs, but I'm happy with Excel when it works. There's like literally some errors I get with macros that drive me nuts. But and I really don't know. I don't know what they're from. I don't know if it's a glitch in Excel or whatnot, but whatever. But I'm trying to max ifs and stuff like. Well, mine allows me to use my account outside of work. I don't know if that's all businesses do that. So it's just like a perk of my job that I have access to all the Office Suite stuff. You're allowed to download it on your personal computer. So I'm sure that depends on your wherever you work, whatever your business is. But cocoa continues to climb. Buy chocolate. Is this more bullish than Nvidia? What's more important right now, AI or chocolate? Like this is a you thought Nvidia's chart was steep. Granted, it's not as impressive if you look at the actual numbers here. Just in terms of, like I said, this is worth $6. You imagine if you bought like 1,000 shares of Nvidia back in 2015 and just held it. And I'm saying it's $6. What is it actually once you get down here? $4. What? Yeah, chocolate. I'm not saying. I mean, the one thing is whether AI is here in the future, we all murder ourselves with robots. We don't know that for sure, but we know chocolate will be here. Everyone's eating chocolate, so it's probably the safer bet. But either way, that chart just kind of making me laugh recently. What's Bitcoin doing? Still climbing? Bitcoin's up a little bit. MicroStrategy on the tails of Bitcoin hopping around. Is shipping starting to climb again? I saw some stuff kind of going back. Nah, actually, it's still. We're more bouncing off a low here, if anything. So pretty strong support right here. I'll say that. Granted, this is just Maersk. It's not an ETF because I couldn't find an ETF for this. But looks like Hong Kong had a little bit of a bump. Maybe China's got a little bump here. 2.1%, 3.1 on the Hong Kong, the Hang Seng. So that's, I mean, good for them. I mean, man, China's just gotten, you know, everything, all the stuff over there has just gotten so cheap. It's just almost uninvestable, though. Just in this current environment. I'm not saying it is in the long run, but it just seems tough. I'd already picked stocks, and I haven't even upgraded. This is, who knows, this is from the weekend or whenever this is. I do have it so I can pull in all the stuff from today and the weekend. This might have been from last Friday. But I got so many tickers and stuff to go through, and we can start going to some of the fundamentals here. So we'll see. It's still the old data for, you know, I wish this would, oh no, 1231. They upgraded BNED. Huh, look at that. They just did that. I was just looking at this morning and it wasn't updated. Now, granted, this looks ugly because the price is down, so it's saying to really dilute it. Which, in fair, that's why I, you know, it's funny. I always find these people and they're like, yeah, it's going to be heavily diluted, and I'm like, trust me, I'm already pricing that it's heavily diluted. That's literally how I pick these stocks, is by assuming they're heavily diluted. Yeah, see, and now the short-term debt is due. And remember, a big chunk of this is operating leases. So it's actually like $225 million is actually due, or something like that. So I don't really count the operating leases right now because I don't really care about operating leases. Positive net cash flow. So they're so close to profitability. We'll get there. All right, here. Oops, sorry, I got to zoom in on this one. Let me just refresh this one. If you guys have any tickers or anything you want me to look into, just let me know. Because like I said, I'm so far behind. This last week has just been kind of all over the place. I'm just trying to keep up on stuff. So with that being said, what I'm going through, it doesn't necessarily matter. I'm just digging around, trying to take my mind off. Always, you know, just lately BNED and even Alto now is just, there's a lot going on. So it's like you get so focused in on just a few companies that, like, sometimes it's good to just sit back and just kind of get back to the old, you know, grind where you're just kind of looking around the market. Because the other thing too is, you know, there's always other opportunities out there. So you know, you get hyper focused on one, and it's tough to get your pulled off of it. But we'll see. It's still early in the year. I mean, it's only March. I think that's part of the reason in this portfolio I had 3 or 4. You know, I guess it would be the whole portfolio doubled twice in the past year. So with BNED, for me, taking like kind of a huge risky position, like, it doesn't really bother me because it's up so much. Like, I just kind of think that's the way you have to kind of play it if you want to take this kind of concentrated risk. So Southland Holdings is infrastructure construction company. They have civil and transportation. Provides specialized infrastructure construction services across North America, including bridges, tunneling, transportation facilities, marine steel structures, waterway treatment, pipelines, blah, blah, blah. All right, so not very old. There's not a lot going on in fundamentals. It looks like this last trailing 12 months has been kind of tough for them. They have diluted slightly. Cash flow is a huge issue here. So cash flow has always been negative. So that's one thing. Like I said, you know, BNED just switched over to a positive cash flow. So 320 in debt, so not too high, but it is slowly climbing alongside, you know, the share dilution, and you know, even EBITDA now is, you know, 20% of what it was, so it's taken a substantial hit. So, and you know, at this point, earnings are negative. Let me go to Seeking, just see if anyone's talking about it or saying anything new here. Doesn't look like anyone said anything. They missed EPS, which kind of makes sense. We can look at the chart and see what the actual market's sentiment's been. I say that, and right as I say that, you know, technical chart is bearish, which probably we could have guessed that, but either way. I don't really care about. It's a really good article, really well written. Including but not limited. Okay. No one's saying anything about it. It's not really going to add anything to what I was hoping I would find there. There was the insider though. There's been a decent amount of insider buys all in here, but like just small amounts, nothing. You know, if you add these all up, it's nothing impressive. And that's all around that $5 mark, and we're still kind of hovering there. So it got all the way down to 4 around there, and then it got re-rated right back up. But still, even with this chart, you know, that's around where management was buying. I don't know. I gave it a 3 last time, but I'm actually kind of surprised. That's kind of high for confidence on this. Just being such a small company. I don't even know when the last time I looked at this was. When was this? Sorry, sometimes my eyes have a hard time. 12.20. That's not that long ago. I thought it was worth 428 then. What do we get lower now, right? Yeah, 247. Ugh. Is there anything I can do to Yeah, I'm gonna need more. I don't see very much. So this is gonna be diluted pretty heavily. So somewhere in there, 225. Kind of poor fundamentals now. Yeah, I don't know if I see too much. Can you look up these SPAC runners have a history of running day 3 of the move after day 2 consolidation, which was today. X. Yeah, I mean, and it's tough. It's tough NASCAR to really value a shell company. A lot of times, it's not going to do much. Like you really, this is really heavily on sentiment. This was probably more your forte if you're going to try and trade this kind of thing. Share count went back down though, so I don't know what they did there exactly. But a lot of these came out and then died pretty quick, so I actually just tried to pull this up. It won't even pull up the what's the actual name? Power and digital infrastructure. Let me see if I can just pull up that because it wasn't. I don't know if it's even going to pull it up. Is this, maybe if I just go to Yahoo and type it in? Let me try it that way. XPDB. There it is. Oh, that's why. Where's this out of? Chicago? Yeah, I mean, I think this looks to me, it's probably the only thing that's moving this is momentum trading. Is anyone talking about this? Oops. Oh, so they're merging. That's why. AIRJ. Okay. GE Vernova is a global leading in electrification, decarbonization, energy solutions, a 50-50 joint venture with JV Montana Technologies. Is that another name for these guys? Or is that just what they own? AirJoule LLC. So the ticker's going to change too, just as a heads up. So probably something to keep an eye on. But yeah, I mean, at this point, they don't really have anything going just yet. So there's really not much else to say. This is all just momentum. You know, you hear good news like that, the whole thing's going to spike because people are going to try and figure out like what that's going to mean, what it's going to do. And from there on, it's just kind of up to the markets where they're going to land on a price. I mean, once it merges, you'll be able to better anticipate that. But just refresh this here. All right, so Entravision Communications Corporation is an advertising solutions, media, and technology company. They operate through 3 segments: digital, television, and audio. Operates are primarily located in Latin America, Europe, United States, Asia, Africa. Reaches a global market with focus on advertisers in emerging economies. So television, blah, blah, audio segments. I will say they don't have a ridiculous amount of debt like most of these communication companies do. So that's a nice surprise, actually, because normally some of these are tough just because of the amount. Looks like they've been spending a decent amount on acquisitions. The debt's not too crazy. It's higher, but not bad. Share count hasn't really done too much. There is what's this insider? This is one guy. Who's buying at 3? Oh, that's the CEO. Whoa. What's the news on this? Let's dig in a little deeper. See a drop off on a chart like that. It's like, okay, what's going on here? He's saying a boom. You know, due to the political cycle. Big an election year here in the States. Oh, did Meta back out of working with these guys? I feel like I read about this a little bit. Gotcha. I like this guy. He like really. I like his principles he stands for as an investor. He kind of calls people out. A little critical. This is actually kind of interesting. So he's pointing out the fact that they got this $100 million in cash here. SPPL. No, it was SLND that I was looking at, but I can pull them up. Yikes. I mean, that's just everybody selling out. So what's the news here? I think maybe I just saw this ticker just because it was like popping up. Yeah, I'm not sure. I don't know if it's... I mean, there's got to be some kind of news on that. Nothing collapses this bad without... Yeah, they're just saying it's a foreign stock, so like it's kind of strange for it to... They're saying no news since the company IPO'd. That's the kind of thing, you invest in some of these companies, you just get the carpet pulled out from underneath you. You know, you don't really know. Yeah, that's what I'm saying. You can just totally get screwed, you know, and you know, they can take advantage because, you know, even if, you know, people are taking small positions in these kind of things, they're not really watching them carefully, and you can get smoked. But that's why, you know, me, I need to know a lot more about a company before I'm going to invest. I'm not trying to play that game where I can take the risk on something I just can't. Some people are saying to buy the dip. I don't know. Well, I mean, how do you even know? I don't know. I guess you can go off some kind of volume after hours here and figure out what the hell's going on with that. But I don't know if you guys are reading what I'm reading. It's so funny. Just him asking this guy to just do some basic math for him, and he's kind of refusing to do it. All right, here. Where was I? You threw me off there. Back to Entravision. So yeah, the EBIT is going to get, they said, cut in half because of the meta loss, or 40%. That's pretty substantial. You know, that means earnings will be negative. Yeah, that's pretty ugly. Yeah, I mean, this is the problem, and this is why, you know, even me, I'm someone that, you know, I think is minimal regulation as you can have, where things function properly, you know, is the goal. You know, I'm not saying I'm totally against all regulation. I'm not. You know, it serves an important place, but when you get into some of these markets where there isn't the kind of regulations and safety nets put in place, like, investors can just get ripped apart. I mean, you put your money in some of these things, and, you know, as an equity investor, you really don't have much say. You might have voting rights. That's about it. It's like all you. I mean, you could try and take over and get a bunch of shares, but, like, you know, not everybody has enough money to go get a seat on a board. You know, it's not that easy. So, and that's to say if you even wanted to be an activist investor. So, yeah, you got to be careful. You know, investing in some of these markets. That's why you'll see me. I put such a substantial discount on some of these countries, just because of the risk that I see there. So, you know, I discount that substantially from, like, if you look at my calculator here, sometimes you'll see I follow this number closely, and then other times that number doesn't mean anything to me. Even like in this case, because there's too much going on here to even use that number right now. You know, that might be a better number to use in, like, a kind of a stable business that's, you know, I mean, this does have years of data, but the problem is there's a fundamental change to these numbers. So is the price at $1.50 maybe more reasonable? Probably. But there's a lot to figure into this. But yeah, so if you're just going on, you know, you're just buying something to buy it, you don't know really what's going on with that company, like, good luck. That guy said, I just saw a comment too before I switched off that page, and he said there's literally been no news from management or anything after this IPO. Like, that should be a red flag. Like, you can't find any news about the company at all. Like, does it even exist? Because I heard people say, like, the best thing to do when you're going to buy a Chinese company is to, like, you know, go on, like, Google Earth and make sure it's a real address, because, like, you can Google sometimes and it'll be like in the middle of a forest. You know, they're just lying. So, and I'm not specifically saying China, you know, and it's not like all Chinese companies are like that. It's not true. But it's something to consider, though, if you're going to be investing in those kind of countries. You know, just any country that you don't know the brand, you can't physically go see it. You know, it's something that you should look into. I think as an investor, unless, you know, and that's the other thing too with portfolio management. Like, you know, me, I tend to take very concentrated positions. If you're going to take concentrated positions, you better know that company really well. Like, you better have done, you know, as much information and research and keep up on the news as quickly as it comes out. Like, that's your job at that point when you're an owner in a company, at least in my opinion. Now, if you wanted to invest in some of these Chinese companies and maybe you're looking for some big turnarounds, you could still play it that way. But I would take super small positions. And when they work out, great, you know, because all you need is a bunch of little ones to work out great and you'll be fine. And then, you know, it balances out with the big ones. So it's not to say that's not a viable strategy. It's just... I have a tough time keeping up with all of it. That's my issue. So I'd rather just have a few concentrated positions where I can really kind of follow what's going on. So I'm going to just update this one real quick in my database here. Let's see here. Wow. Wow, that was substantially discounted from the last time I looked. Because what am I getting now? Is my number here? I just want to go back and I just got to do some quick calculations here. Yeah, I get $1.72, which don't worry about, you know, me even picking that number. It's just, that just gives me an idea to keep in my mind a substantial discount. So in here, you know, it also poor narrative now. I can take out that it's too expensive because that's not the issue. I'm sure they're going to get rid of that dividend. Maybe they'll pay it out, but they do have the cash on board. All right, what's next? What's next? Sphere Entertainment. This is biannually. Is not what I want. I want quarterly. All right, here. Let me just adjust this. So they include MSG networks, which if you live anywhere near New York, you know what MSG is. So it's, different programming, but usually for prominent sports teams in the areas, typically the tri-state area. So something with these guys, they are worth a lot. Just the brand name, and the rights. I talk about a moat. Cash flow just now has been a little rough, and it's no, the problem for me, no matter what, is it's just expensive, and these revenues that's super low. And they're selling assets off here, so that's probably the difference now. So what do they have for cash? They got quite a bit, but they have a decent amount of debt still. And their short-term debt's 905. No, I just kind of want to go to the SEC page. I just want to look and see what's going on with the with that debt. 'Cause that's a lot of debt. So they had restructuring charges, so that's important to note, because maybe. So they're going to have to do something about this debt. Unless this was paid and that's why they sold those assets off. It didn't really, like, this guy didn't really say. Or did I just skip right to comments? Actually, I take that back. I didn't read what he said. So let me go. So this is also where they have the events. That's okay, that's part of it. So, oh, in addition, okay, sorry, I must have read this so quickly. I totally missed that they're also the Sphere. I want to go see that thing. That thing must be cool. One of these days I'll get back to Vegas. Jones put some serious cash down. And so he owns 645,000 shares. There's 35 million outstanding. Nice. Yeah, I'd be curious to check it out. They're talking about the possibility too of them, building a few more of those things, like, in different areas. Obviously, if it's super, you wouldn't want them too close to each other, but like having a few of them around. So actually, I want to go back to their 10Q here because now I'm curious. Like, what are the more recent numbers here? Let's make sure that mine. So this is okay. This is from December. Long-term debt. So they really just got to get through this short-term debt that's there right now. Which, I mean, if they have a lot of cash on hand, I would be surprised if they can't do something to adjust these things. And okay, so now I see what these guys are saying. They got to figure out what shows are going to come in. You kind of treat it like the movie industry, in terms of that. MSG and all those networks and stuff. That'll be a relatively stable outlet, but when you own something like that, it's what kind of shows do you get in there to keep people coming and see that kind of thing. I mean, it's in the right spot. You want to talk about a place that people are always going to be coming to see shows. And then, so what's the book value on this? 70 a share. And now it's just, can the cash flow keep up with that? Which, according, due to CapEx reasons, free cash flow is pretty rough. The balance sheet will look a lot better when that debt gets resolved. All right, let's throw this one in here. So insider's good. Actually, that brings me to one more point. I just want to see what the ownership is on this. There's Dolan. Jericho Capital Asset Management. Actually, somewhat concentrated for having almost $4 billion of assets. So there's actually some decent ownership, and I mean, shares look good. People are bullish at the moment for it. So, good narrative. high debt currently, but we'll figure. I'm gonna throw this on deck just because it's an interesting thing for me to find. It's too expensive right now for me is the other issue. It just kind of needs more. Is what I would say. And then where was 33, 38 is what I got. We'll keep that for now. Whatever. It doesn't really matter. It's going to change. Like that number doesn't really mean much. Either way, it's a little too expensive for me. I would want to see how things pan out and then wait for something to change a little bit. I meant to click 3 here, not 2. My confidence, that a 3 just means when I'm talking confidence, like I don't know. It just means that like I understand the idea of what's going on here. Obviously, it's not like I don't know enough to make really any kind of decision here, but just at a basis, I know what's going on. Somewhere in there would be super cheap. All right. Just want to check what's the new comments going on here. So I'm always just sorry. I'm just still curious on what these guys are saying. It's funny. Every name Dominic mentions here has at some point bounced back massively. Good points, Dominic. But I get it. Most people they see poor fundamentals and that's all they can look at. They don't look anything outside of that. They don't look past the balance sheet. Not to say that the balance sheet's not super important, but they can't like see what the future could bring. That's it. They look at a balance sheet, it is what it is, then they have nothing else to say. So nothing really's changed here. And I'm not going to sit and listen to these guys go back and forth when they really don't have very much to say. Henrik just needs it to fail now because he's put his throat out there. So it's only to his benefit, you know. And who knows? I don't know what kind of short position that guy has because he obviously said he shortens these stocks. All right. I don't think I have too much else to add here. But this is interesting. This is an interesting company. All right, let's go on to the next one. It's terrible. I'm all out of beer. Just drinking water tonight. The beer sounded nice too. Actually, the weather warmed up here a little bit. It's nice to finally get some decent weather here. What is this annually? All right, here. Oh, it's Sabine. If you guys haven't looked at these, they're mining metals processing group. They're all over the world. Sabine's a good one to just kind of follow. It kind of follows, you know, some of the major commodities in terms of metals, specifically gold. But I think last time I looked at, I think they had fallen off for like a while. Sorry, I'm just trying to pull this back up over here. Yeah, so they've been on a downtrend for a while. I just want to see how close they are to actually tracking gold. Where are you? So recently, totally unaligned with it. So paying a dividend, revenues are up, share count's up. Have a good amount of cash on the books. Spending a lot in CapEx recently. Some small acquisitions. Nothing really stands out too crazy. They do run pretty thin margins. That's a big thing with them. You know, like you look at their EBITDA margin, it's 1%, 2%, 0, 1%, minus 1. So pretty big swings based on that. And copper, that's probably, maybe that's another one to check on. I mean, they're a mix of commodities, like I said. So, and copper is becoming, I just feel like such a valuable metal. Just trying to see if there's anything that stands out to me. I've looked at it, it's been a while. I've owned them in the past, but that was probably I honestly don't even remember. Yeah, just to see what these guys. So they have uranium, they're saying, as a hidden asset, possibly. That's interesting. I wouldn't know really well how to value that. What is uranium doing right now? I know it was up for a little while. Still up, it looks like. What do I do? There we go. Yeah, it's still high. Historically high. Interesting. Oh, they cut the dividend. Don't say anything else other than that. I'm gonna pull up this transcript. I'll probably read through this one. Let me just throw this down. I won't do it on here. Not gonna do anything to try and read through something like that, but that's how I wanted to do it. What was I looking at last time? I assigned it to 0? I wonder if that's a mistake. I usually don't put a 0 in. I was gonna say I would imagine if it was $1.70, I must have rated it like $4 or something like that last time. gonna do some quick calculations here. I'm just wondering how I got that number last time, so I'm trying to figure out what I did last time. Yeah, because I'm getting... I get like 540 right now. Somewhere in that range. I mean, what does it matter? It doesn't really matter. But it's still, it's a little expensive at this price for me. Should we say like 360 there? Just, I'll mention the asset there, just about the uranium. Just because I saw that. I mean, who knows? It might actually matter, but just something to think about. All right, here. All right, United Natural Foods, distributor of grocery and non-food products, wholesale and retail groceries. If you guys, and they have their own segments that include the like single foods. Oof, sorry, getting yawning already here. That's why I need my beer. This is terrible. I guess I could go get a scotch. That sounds good actually too. So EBIT is down in the trailing 12 months. Margins are pretty thin. They run negative cash constantly. They have a lot of debt, unless that's it could be a ton of leases. Let me just check. I mean, there's a substantial amount of its leases. Still got $2 billion in debt. What does that do? They got time. All right, with food inflation pressure cooling during 2023, it was this trend which hurt margins in a big way. Cut their guidance to 750, EBITDA guidance further to 630. Yeah, and they're starting to say that the leverage is really high. You know, they probably traditionally had run with that really high leverage, but now it's starting to become more of a concern as the numbers start to get worse and worse here. Yeah, they always ran pretty high, at least since 2018, which they had a substantial purchase in 2018. So that's where the debt first came from, was the whatever that acquisition or was. They said they bought some shares, but like what kind of amount of shares is that? That doesn't mean anything. Well, this one's plus 42%. That's not a small purchase, but so it sounds like he's not really bullish. I'm not really sure. He kind of ended that on like a, I don't know. I don't know what that was. I don't know if that was a buy recommendation or a hold or a sell or keep an eye on it. I think that's what that was a watch and see what happens. All right. What else? Yeah, I get 13 for this here, so but yeah, down substantially again. Somewhere in there. It's actually what I said to buy it around last time. So somewhere around 9 becomes interesting. I don't think I have anything else too much to add to this one. Got more comments. Comments still keep flowing in for BNED here. Sorry, I'm going to keep peeking at this just because I'm curious. Yeah, it's you know this is one thing I immediately agree with. He's like, none of the examples you said had improving fundamentals, and you know he's clearly BNED has been ran terribly, and it's like you didn't look at the story at all. Like it always kind of blows my mind, like when you put your word out there, but you didn't read really anything on the company, so you have no idea what's going on in the situation. So you're saying clearly it's been ran terribly here, but you have no idea what's going on. Clearly you don't know what you're talking about. Was that the only new? Or did you comment on here? Yeah, I mean, you know, I never really had listened to Henrik all that much, just because he's a trader, and I don't really, you know, he doesn't really tend to look. I mean, he is in some of the companies I'm in, but I've never really invested too much with him. The only time actually I invested, I think maybe alongside was with the rig, when we invested in rig, and he was, I think he was bullish at the time, if I remember right, because I don't remember ever having, but yeah, I guess it's the same thing that's been brought up all this time. It's just nothing. There's just nothing substantial by saying like it doesn't look good. Like that's what all these bears are saying is like, well, it doesn't look good, and then like, yeah, and you know we know that we know it doesn't look good. That's not what we're trying to do. We're trying to see is what can make it good, and there's a path. There's a path to being successful here still. So until proven otherwise, it looks like slowly they keep taking steps in the right direction, and the whole market is just continuing to disagree, which is fine. Whatever. But, I'm not looking to make like some tiny gain off shorting a stock. Like, I just don't care. Like, in the grand scheme of portfolio, that's a waste of my time. I don't have a lot of time. See, I'm yawning here. I'm trying to keep up with all these things. This is from the weekend. It's crazy. Like, you see these spreadsheets? Who builds these? Who thought this was a good idea? A lot of insider on this one. So this is AMN Healthcare Services, provider of healthcare total talent solutions, facilities across the nation, provides unparalleled access to a comprehensive network of healthcare professionals, so nurses, travel nursing, labor disruption staffing, local staffing, international nurses. They also have a physician, so they kind of like lease out workers, essentially. It's like a travel company. So these have been doing well, or I would think the market right now is huge for this. Like I said, I work in a hospital, so there's a ton of travelers. It's such a big business. In the long run, will it continue to be what it's been? I don't know. I actually feel like we kind of hit the peak of it, but at the same time, we need people to run these things. You have to have hospitals. You have to have the healthcare industry. So as hospitals continue to try to, stay, out of the red, they're going to do whatever they can. And if they have to in the meantime to keep workers, they'll do the travelers. And they'll pay for it too. Hospitals will pay up. There's also certain regulations that you have to hit. So like they have to do certain things to keep staffing at certain levels. Historically generates excellent cash flow. I mean, this is, look at how much this has improved over time. What's the debt? So they are substantially increasing debt over time. I don't really like that. They bought shares back, but this doesn't seem like a great time to buy shares back. I feel like the price for this right now is high. Is that what they did? They bought shares back? Blah, blah. They're saying lack of growth, which, I mean, revenues are down. Obviously they were really high during the COVID period. That's kind of what kicked all this off, is you had a lot of people leave the healthcare industry during COVID just because it was a lot. It was a busy time. It was kind of wild. Definitely the wildest time I've been in the hospital. Just like a decade. So I'm actually I'm surprised it's went down as much as it has this year, and I still want to know what is with this debt. Why do they have so much debt? They're 10K. This is from January or February 22nd. I mean, okay. So notes payable and a revolving credit facility. Where's their cash flow? Sorry if this is like really zoomed out. I hate how they sometimes do this on this website. Like, just condense this in for me, will you? Net income's been going down. So 4.6% senior notes due 2027, 4% due 2029. And then there's senior credit facility. When is the senior credit facility? When does that mature? So the first one here. For 2028. Okay. So they got plenty of time to deal with it. Did it say they have a lot of, no, they don't have a lot of cash, so, but they do generate pretty good cash flow and whatnot, so they obviously can play around with that. Now, I don't know exactly what they're acquiring here, but I mean, their acquisitions and whatnot have been pretty wild. So, like, even if we just measure this out here, they spent 1.7 billion on just acquisitions, and then you look at net common from earnings is 1.7. So literally every dollar they've gotten, they've put it right back into acquisitions, which is kind of wild. And during that whole time have drastically increased their debt. Maybe it's more efficient for the business to have that debt. I mean, the interest rates aren't too terrible. They're a little high, but not too bad. I definitely think it's got like a good narrative and everything for it. I think it's a little expensive for me right here. Good narrative. Too expensive. Definitely S&A. We'll throw that in there. Hide that. It's like the same as this other company. They're not cyclical. Not really. Were they paying a dividend? That's one thing I didn't really notice. No dividend. They're doing buybacks. Retained earnings are drastically improving, 50%. If they stop doing all this serial acquiring, I don't know exactly. I'll have to look more into this business. What I'm going to do actually is, what is this 14? EPS. All right, this earnings call transcript. I want to. That's what I'm going to read through. I'll just put what was it? 26. I think it was 28 and something else. I can't remember. I think it was later. I think it was like 29 or 27 debt due. And I said it's worth about 50. That's just my quick guess. So I'll need a discount here, but on deck. This one's interesting to me. One of the rare ones in the actual healthcare criteria I get to actually look at. All right, what time we got here? 9:16. We'll go through one more. I don't know if that's still you, NASCAR, watching, but if you had one more ticker or something you want me to go through, just let me know. If not, I'll just probably do this one, and then I'm probably going to call it, guys, tonight. Just try and get some sleep, get caught up for tomorrow. Of course, this one doesn't have much to go off of. This is the second one I've seen that the share count has just plummeted like this. Are they actually reducing equity? Is there like convertible or something? Like, why is it doing that? Oh, that's that 8K. Not what I'm looking for. 10K. There we go. NWGI, it's a Chinese play, probably pretty scammy looking. Yeah, the ones you've been throwing my way have all been kind of tough to read between any kind of lines there. I mean, I'm not saying you know, I mean, hell, if you're hitting them, good for you, man. I have no idea which one I was just on. Okay. It still says they have 1.3. Shares outstanding is 5 million. So this number's right. I don't know where the hell those numbers come from. 17 and 19 outstanding shares. That seems crazy, but whatever. It doesn't really matter. Maybe that's before. Either way, there's really not much information on this. It's almost impossible to really say much about this. Besides, it's too. Where'd it go? All right, there we go. So yeah, this one's a quick one. Just it's too young, needs more, and too expensive currently for me. What did I say? About like $4, somewhere in there. Somewhere in there. Who cares? Doesn't matter. And just one last thing. I just wanted to see if anyone's talking about it. Here's 4.8 million order for medical diagnostic optics. So it's 10% of their revenues. All right, not a bad thing. Was this chart done? So just getting started. It's still young. We'll sign a 2 for now. Contract signed. All right. All right, I'm gonna start closing out some of these things. I don't need all these things open. All right. Well, I think I'm gonna call it good there. You know, we'll have to see what else happens. If there's anything else in the week, I'll go through some of these transcripts, and maybe we could find something worth adding into portfolio. I'm starting to get to the point now too where I'm thinking I haven't found anything as convincing to me as BNED. So in the meantime, while I'm just looking, and there's other things that interest me, but maybe not as much. I might just start to just take some small positions just to kind of get some other capital out there into some other things, just because it's been kind of a minute since I've gotten into some of these other things. And there has been interesting ones, just nothing's really like taken off for me. But that doesn't mean I can't kind of nitpick some of these other ideas and trying to get something. I thought it was funny today. I was listening to a podcast and they were talking about Buffett today and saying, like at this point he's like buying some of these like kind of like stable, like pretty low risk Japanese companies that are kind of cheap and like they're not really great businesses or anything like that, but they're just going to kind of trickle along and slowly grow or slowly return value to shareholders. And I think when you get to like his point, you're not going to be able to find like the next Apple, which I guess you could argue maybe is Nvidia right now. Do they really have a moat and all that like Apple did for such a long time now? I don't know. I mean, and is their graphics cards really going to be that next product that just dominates a market? It may be. It's really hard to say. I don't know it as well as I feel like the Apple one was a little more obvious that the phones were going to be such a big deal because they just took off so quick and everybody all of a sudden had them and needed them. And I don't know how much AI is going to do in terms of that, but back to my original point of being is just trying to look at some of these smaller things where I might not be able to get the high percentages I want on some of these things, but if I think I can sneak out a few extra percentage points on some of these things too, like maybe it's worth just to balance the portfolio out with some of those ideas. Which I know you normally do that in portfolios, and this being a high risk portfolio was really not in that idea, but and I thought I was going to find 2 or 3 really convincing ideas all kind of at the same time, but the problem is usually when I get in one of these things, to get the 50% return works out pretty well. So you get in a stock, and sometimes it only takes a few months, and then you get your return. Now, granted, most people probably aren't looking at the small cap section or sector like I am, and I'm talking small, nano, micro caps. But there's a lot out there, and there's a lot that I think people just overlook. So we'll hopefully I can get some of these names and go back into the watch list. Like Ampy, I saw the Ampy thing. I didn't see the news when there was the oil spill. I wish I would have. That's literally a ticker on my watch list. And if I would have saw that got down to $3, I would have took a pretty sizable position. And by the time I looked at the next day, pre-market when I could have ordered, it was already like 560 or something like that. And I was like, that's the entire opportunity missed right there to get a huge discount. Because it's another one of those companies I like all the fundamentals about it and everything like that. I just don't. They just need either an event or they need something that's going to change, that's going to make them grow, and I just didn't see that with them. So that part sucks, but it's whatever. All right, well, have a good night, guys. I will. Johnny will be on Thursday. He'll follow up. I'm sure he's going to go through Alto in his own opinion too, because that's a big position for him. I still own Alto. I do have a small but reasonable position still in them, so it's not like I'm not watching them. But it's been a while since I've really delved into them quite like I was before. At one point, I was really dialed into them, and I still think. Despite what the market did, in terms of selling off after earnings, I really don't think it's a bad thing. I just think it's taking time, and it's going to take longer too, which is that's the toughest thing for most people, investors, to swallow. And so we'll see what goes from here. But everyone, have a good night, and we'll see you guys in a little bit, few days, and then we'll be on Saturday too. So we'll do a nice stream on Saturday, all right? All right, peace.